In this video, I want to show you how you can roll a put option on Interactive Brokers. You can see on my screen that we've got the IWM, which is the Russell 2000 ETF, October 20th, 175 put. You can see I've got 3 contracts open. I am $60 up roughly for the day, and I'm down $101 on the overall position. Now, what we're going to do is we're going to roll this into the next monthly cycle. So what I do is I like to trade only in the monthly cycle and like to roll positions 21 days before expiration. And today I'm recording this video on Friday, September the 29th, which is the magic of 21 days. Now, the reason why I roll positions at 21 days is that 21 days is the sweet spot and the optimal time to roll options in the next cycle to pick up enough time value and potentially a credit. Like I mentioned, we've got the 175. So if we roll the position and we scroll across to the next monthly cycle, which is November the 17th, the price of IWM is 177.48. So I'm really close to my strike price of 175, which is why my position is down $101, because I think I sold this position when it was at 180, 185. So as the price goes down and closer to your strike, the more your option gains value and therefore more expensive to buy back. So we'll be buying back the 175, and you can see here it will cost around $207 per contract to buy this back. But you can see here that we've got some strikes below 175 where we can actually do this for a potential net credit. So if I go for the 173, which looks pretty good at $80, so 3 contracts, $80 is $2.40 or $240 potential net credit by doing this trade. So if we think about what we're doing here, we are reducing our risk by $200 or $2 times by 3, $600 in terms of de-risking ourselves and getting paid $240 to do that. That's the beauty about rolling and adding extrinsic value in terms of time value onto options. Allows you to roll down your strike from 175 to 173 in this example. So if we click on roll position, you can see here that the limit price is 78. You can get 79. What I'm probably going to do is, just for the sake of getting filled, probably isn't the best thing to be doing, is I'll leave it at 78. I will buy the option there, and you can see here that I got filled at $77 per contract in terms of a net credit. So again, I've rolled the 175 to the 173 from the October cycle to the November cycle and gained a net credit of $77. So I've put money in my pocket to de-risk that position, which is absolutely fantastic. So if you want to learn how to trade options profitably, you can click the join button down below, which then has my training course as well as my one-to-one coaching, and you can learn how to do this for yourself. So hope you've enjoyed it, and I'll see you guys in the next video.